Welcome to the dinar community. The global financial system stands at the brink of a major turning point, one that could redefine how currencies are valued, exchanged, and trusted in the modern era. For years, economic insiders and high-level financial experts have hinted at a global currency reset. Now, those hints have evolved into concrete evidence, with multiple reliable sources indicating a synchronized revaluation of the Iraqi Dinar IQD and the Vietnamese Dong VND. This isn't a baseless rumor or the work of fringe theorists. It's being described as a coordinated international effort involving leading financial institutions, policy strategists, and elite global banks. Reports suggest that this event could unfold within mere days, a claim supported by emerging data from several key global markets. Roughly 2 weeks ago, an urgent closed-door meeting took place between two influential financial bodies, the International Monetary Fund (IMF) and the Bank for International Settlements (BIS). The meeting focused on alarming global issues: rampant inflation, tightening liquidity in developing countries, and the growing de-dollarization movement across Asia, the Middle East, and parts of Africa. As more countries step away from the US dollar as the global reserve currency, policymakers have been pushed into swift action. Insiders with access to post-meeting documentation confirm that the outcome was clear: select national currencies are approved for revaluation. Iraq and Vietnam topped the list. These nations have met IMF requirements, including monetary reform, political progress, and global trade alignment, and are now seen as central players in a multipolar financial system, one that favors regional strength, real assets, and digital infrastructure over fiat dominance. Following the meeting, test exchange rates for the IQD and VND surfaced across several Tier 1 international banks. These test values, $4.81 to $6.15 for the IQD and $2.97 to $3.83 for the VND, appeared briefly across various banking systems, suggesting systemic readiness for a major liquidity event. These were not accidental glitches. The values showed up almost simultaneously across integrated financial systems, including SWIFT and RippleNet. The coordination implies a deliberate rollout rather than random testing. This level of alignment signals the imminent public display of new currency values. Iraq has spent years stabilizing its economy, enhancing its financial systems, and boosting transparency. The Central Bank of Iraq has implemented digital upgrades, increased gold reserves with verified audits, and upgraded oil trade systems. Key partnerships with countries like China, India, and Russia further bolster Iraq's position. Vietnam has also made impressive strides through its booming manufacturing sector and high-tech exports. The State Bank of Vietnam has tripled its gold reserves in the past year, a clear signal of revaluation readiness. Both countries are now prepared for their roles in what's being called Phase 1 of a long-anticipated global currency reset (GCR). This reset aims to replace fiat systems with asset-backed currencies, those supported by real wealth such as oil, gold, and manufacturing. Iraq and Vietnam stand as early leaders in this shift, and other nations like Zimbabwe, Indonesia, and Egypt may soon follow. According to those involved in planning the reset, the revaluation will occur in 3 structured stages. 1. Private notification phase. Tier 4B participants, verified individual currency holders, will receive encrypted communications through secure channels, email, banking platforms, or messaging apps, inviting them to schedule redemption appointments. 2. Institutional Forex updates. Major currency data platforms like Bloomberg, FX and Refinitiv will silently adjust their figures, allowing banks and institutions to recalibrate financial positions. 3. Public exchange phase. The final stage will involve a full rollout of new rates to the public. Redemption centers, already operational in over 40 global cities, will facilitate secure transactions using biometric ID systems, currency verification tools, and professional financial advisors. For currency holders, the advice is clear: protect your assets. Store your notes, receipts, and documentation in secure, fireproof locations. Experts urge caution: avoid buying more currency at this stage and focus instead on preparation. Be vigilant for official updates, and never trust unsolicited messages or offers requiring upfront fees. Scammers often exploit moments like these. It's also wise to consult a qualified tax professional now. Redemption could involve significant financial changes, and understanding potential tax liabilities beforehand is crucial. Any promises of VIP treatment or verification via shipment or red flags. So, why would major global powers align to revalue currencies like the IQD and VND? The answer lies in the increasing instability of a fiat-based world economy. Years of unchecked currency printing, rising national debt, inflation, and economic imbalance have exposed the limits of traditional financial models. The GCR promotes a future based on transparency, tangible assets, and distributed financial power. This shift isn't just financial, it's systemic. It encourages reinvestment in infrastructure, global humanitarian efforts, and debt relief. The revaluation isn't merely about new exchange rates, it's the beginning of a sustainable, asset-based global economy. Banks are already setting up secure redemption sites, platforms are testing internal rates, and infrastructure is in place. Whether you're a currency holder or just an observer of this evolving financial transformation, you are witnessing a pivotal moment in history. Stay informed, stay cautious, and be ready. Subscribe to Dinar Community, activate alerts, and stay connected as we move into a new era of economic balance and transparency.